Hello Jose, this is John here. Just wanted to give you an update on your trades. You were looking at this chart, the euro dollar. You're quite right. There is a trend line going up. Quite right. It's broken the trend here. It's pulled back. Quite right with the support and resistances, and that makes loads of sense. Quite right with the breakdown and the pullback. And so you're waiting for the short. Now the question is when to trade the short. And really, from my point of view, I think it's always good if you can get everything lined up. So let's just have a look first at how things line up for me. Let's go to my chart here, and I'll bring up the crosshairs. We're talking about this day here, in fact. That was the 2nd of November. You can see quite rightly, as you pointed out, that it has pulled back, and we've got this process going on here. And you were quite right about the idea that it would pull back up to this sort of level and then pull back away again. It was just about the difficulty of the entering and how far away your stops should be and what time scale you were trading. Now, if you were trading the daily, you were looking for the pullback and then the break down as it hit some kind of resistance. Difficult to see how you would make a decision about the entry on that at that level. So let's say that we went in and looked at a smaller time frame. Now I noticed on your spreadsheet, let me bring that up for you. On the spreadsheet you ended at 12:13. So that's a pretty precise kind of time frame. I'm going to work on the basis that that was potentially a 15-minute time frame that you might be looking at or examining at that particular time. So let's just suppose we looked at the 15-minute for the sake of argument, which might not have been the time frame you were looking at. Let's just now take this and move ourselves back. Come back here, ignore all this movement around. We're looking for the, oops, we're looking for the second. Where have we gone? That's the third. There we are. That's the second. And you're quite right. It came up to this sort of level and it broke, and it hit the same sort of level again and broke away. However, it's timing. It's all about the timing of the entry, or how much money you're willing to risk, and the stops and so forth. So let's just zoom in at 12:13. You see this candle here. That's the 12 o'clock candle. We're pushing up hard. You sold it at that level. Interesting idea. You're selling as it hit the resistance level. And indeed, you were right. It then pulled back down again this way. Your question is, what are you expecting to do? Take the big trade all the way down, or trade manage it? You can see in the end, you got in at these sort of levels here, but it pulled back, hit this level, and then broke up. You could have made anything up to about 26 pips or something like that. If you trade managed it, you would have got into that trade there. You would have had your stop above the high, which you did, and then bring the stop down as it comes down. On mine, you can see my indicators down here. I've got these two down the bottom here, this S trader and M trader indicator. Both of those are pushing back up again at this level. So for me, I would have put a close order stop about that sort of level, in which case you'd have banked 12-13 pips or so, something like that. As it was, you got hit, your stop got hit on this big push back up again at this time of day. 1:30, often a lot happens around 1:30. I don't know what the news events were at that time. That might have affected it. So you're dealing with news events, you're dealing with the actual trends and so forth. If I look at my bull bear butterfly indicator, which is this one here, at this particular time of day, if you look on the legend on the left for the bull bear butterfly, let me just point. I can't quite show you that, it's just off the screen, but anyway, if I go to that, you can see that both blue lines are above the zero dotted line. And even when it pulls back down to this level here, they're both just down to the zero line. They're not saying we're short. They're still pointing to the potential for a long trade, which actually turned out. So with my indicators, I would have been cautious about going short at this level. It was a brave, bold move. And it would have actually given you a certain number of pips, but you would have been needed to be ready to take the trade off the table once you moved into profit and once you got an indication that it was going the other way. Without my indicators, you'd see this candle here, and you see that this actually fully engulfs that. Okay, so it rejects it, engulfs it, and goes back up to the again. Clearly a move, change in direction, clearly a move to the upside. Clearly, well, not clearly that you're going to go that far, but clearly you need to cover your short and stop it at that point, in which case, yeah, you would have made 15 pips. So that's just my take on it when you're trading those sort of time frames. If you're going back up to the daily, well, then it's completely different kettle of fish. On the daily, for this particular trade, let's bring it out here. On the daily, you're aiming to short it at that sort of level here, which is what you did. This was the low here, which I think you were working on the basis of that. Support becomes resistance quite reasonably. But you look here, there's another one level there. It's a kind of whole zone of resistance at this level and support at this level. And then there's another whole zone here. So from the point of view of the trade, it could go anything all the way back up to somewhere in there, 78, 80 pips, before you know that it wasn't just coming back up and following through, that it was rejecting at that level. Of course, this candle here on the daily says we're going short again, and it engulfs all of that candle. Very interesting again. But again, it didn't really break away. Now we're back up to there. Very noisy, very messy. So given that we are in this zone, and you may well expect it to have this is like a bear flag, so you might see that as a bear flag, it might drop away again. You want to be trading it off the shorter time frames if you're going to be trading it, and you want to make sure that the shorter time frames are supporting you in Trade Manager. That's just my opinion. So hope that helps. Okay, it's John Cato, 30-minute trading, and have a profit back. Wishing you happy trading.